Good day, guys. Welcome to Forex Walker. Welcome to episode 82. Now, on this episode, we are looking into the trades that we took previously for the fourth term. This is Euro USD, the famous Euro USD. And these two red lines are the previous shoulders. The main previous shoulder is the one above, and the one below is the second previous shoulder. But what is important is that we need the market to either manipulate the highest previous shoulder or play between the two previous shoulders, known to you as an order block, but I don't use them as order blocks. I just use them as previous shoulders. Now here you can see that those who call them order blocks, they look into the 50% of this previous candle, but I don't do that because my previous shoulders are right here and not up here. So the market shows you here that it has rejected from the previous shoulder. The first rejection was here, and the market came back to manipulate above that previous shoulder, and the collapse in the market or the gains in the US dollar and the losses in the euro were undeniable. So here you can see that the trade proceeds to move lower and lower, and we expect the market to actually break below the previous 50% feed. The 50% feed, we expect it to break below this low and move to the lowest levels. We'll see where the market reverses to. This is the famous Euro USD. For those who trade Euro USD, I only go short on Euro USD. I never take longs because I'm a carry trader, and the positive carry is in the shorts. The euro is, even though the euro did not cut interest rates, but the euro is actually overextended, and we all know that the euro is in debt from the Ukrainian war. Europe itself is in debt as they were loaning all kinds of money to a country that will not win the current war in Ukraine. So they're basically betting on a losing horse. So that's why the euro is collapsing at the moment. There's really nothing that is holding it up there. Someone would say it is overextended and it is reverting from that overextension. That's the second reason, but there's nothing positive in Europe at the moment. And the US dollar is held long because of some call it a hawkish interest rate cut. But because I look into core inflation or core CPI, core anything that that does not include energy prices like fuel, food, and any other energy products. So this is the those are the two reasons why we are holding this trade. I am not invested that much into buying the US dollar. Well, I'm just looking into it as any other trade that I would be looking at. The USD CHF here shows you that they did revert to the previous shoulder that was previously manipulated, as you can see, and we're reversing nicely, as you can see, from the lowest low, and it shows you that it will break above the previous low. Remember, we are buying the hawkish interest rate cut in the US dollar, and the Swiss franc is in trouble based on the Swiss franc having a 0 percentage interest rate, and they have to print money to avoid moving into the negative interest rates. So anybody who's looking into the Swiss franc, just sell the currency and buy whatever that is uh, easy to buy with your broker. So these are the longs that are expected to break above this next high, which is the 50% fee. You can either take profit as soon as you break above the 50% fee, or you can hold the currency, wait for the pullback to come back to the 50% fee, and proceed with your trades. The JPY is also a currency that you may look into buying. It will hold and it will proceed higher. In fact, for those who are trading the JPY, I was looking into the JPY from all the way down here, and the JPY will never reverse. So whatever you were doing, just understand that the trade that you were holding with the JPY will not reverse. That's the reason why even when the US dollar is losing strength, the trade continues because the JPY is really hiking interest rates at a time where they're chasing inflation, but they're collapsing the GDP instead. So at the moment, remember we're in a recession, and in recessions, we're supposed to move into recessions together with all global economies. But global economies are in a recession, and the JPY is chasing inflation, and they're busy increasing interest rates when they were supposed to hike interest rates. So these are the reasons why the currency will keep collapsing, and anybody who's holding longs on uh, or who's holding shorts on the JPY, just understand that you just buy and hold and forget. That's how you are gonna, just the same way that you trade silver, gold, and any other commodity currencies. Pass. Remember the pound SGD, the pound Singapore dollar. Remember that rally and the base, and the next rally being all the way up here. The trade all the way up here. Here it shows you that when we look into macroeconomics, the pound is actually collapsing and the Singapore dollar is actually gaining strength. And it would be wise for you to look into the old drafts that I have here with a collapse to the previous order block here. If you look into my previous videos, you'll be able to see this uh, price action projection where I expected to break below this low and give us the next rally from all the way down here with a negative carry of negative 2.19 points long. For those who hold longs, the pound SGD, I have left this trade for some time. Previously, I think we were up here and I went long previously for a short term. I took profit from up here. I think we have an order block here that I've drawn. I don't see it anymore, but we used to have a tiny order block where I took profit, and the market reversed to manipulate the daily time frame trend line over here, and the trade is about to collapse all the way down there. I'm not ignoring the pound SGD because the pound is getting weaker. I will be monitoring the trade before I take what I call the boom bust processes. The main expansion called a major bust out of the pound, the British pound, created by interest rates. Now, a major bust happens when a currency moves out of a recession, which I believe the pound will exit the recession ahead of the euro. Uh, that is how I'm stationing my pound trades here with the SGD. We also have the CAD. Did not pro uh, did not the CAD did not show the same diagram or price action print similar to that of the pound SGD, but this is the previous line and the order block where I took profit on the pound SGD. I was looking for this actually. But for both currencies, I took profit at the same level as you can see. But this order block was supposed to also appear on the pound SGD, but it's no longer there. That's why I took profit. And because the CAD is gaining strength, is actually exiting the recession. That's part of the reason why we're not really having that rally. Perhaps that rally might come in the future, but I'm not intending on going long on this trade because I know it will collapse based on the pound getting weaker and the CAD gaining strength at the moment. We're expecting to reverse somewhere from down here, and we're expecting to get a rally from there. I don't know where the actual order block is, but on the pound SGD, the order block is widely visible. But this is actually a drop, base, sideways move, drop. So we're expecting to drop here, to go sideways and drop lower. That's our expectation for a price action trader. They'll be looking at Wyckoff schematics and they'll be thinking about higher highs and going long, but that will not happen. We're actually getting a collapse from here all the way down. That is based on context, that is based on macroeconomics, that is based on interest rates. So you cannot run away from uh, macroeconomics and monetary policy divergences. Similar to the Euro USD, we have the Euro AUD with the AUD holding interest rates. And we really talked about this trade for a long time. Many people don't understand exactly how I trade, but basically, what I do is that I hold short trades for a long time, with which here we have two touches, and we expected the third touch to break. This is the third touch actually. This that you see here is actually here. So we were expecting this high here to break and hold the previous shoulder, but because the uh, economic divergence between the two currencies was huge, that's the reason why the market reversed from all the way down here. For those who failed to hold short from here, they were still able to hold it on the 23.6. Remember, we only trade the green, which is 23.6, and the 50% fee, which is 0.5%. I just call it the 50% fib and the 23.6. But for commodities, I look into the 23.6 and the 38.2. That's how I trade silver. And here we are holding the shorts, and the shorts are really undeniable. The profits that we're making from the Euro AUD and the Euro USD. But from my side, I would rather hold Euro AUD. I would rather spend more money on Euro AUD than I would on USD trades, USD CHF and Euro USD. So these are the trades that I'm looking for into the fourth quarter, moving into the first quarter of 2026. Similar to the USD CHF, we also have the IUD CHF, or perhaps you might hold the IUD JPY. The longs were held a long time ago from the previous low, the previous shoulder, and the trade continues to do the beauty that we're looking into. The take profit levels are all the way up here, but I normally take profit as soon as we break above the 50% fee. That's how I take my profits. But as you can see, we're not really that far from the take profit level, which is the weekly time frame trend line over here. I need to change the colors on these boys. Let's look into the JPY for a second. The JPY is parabolic because every single economy is cutting interest rates and JPY is hiking. And that's the reason why we have this parabolic move that is moving higher and higher. For long term traders, when you hold a JPY trade, you forget about it. Previously, we were holding longs from this breakout here, and the market never reversed, and we're looking to break all the way above that based on monetary policy divergence between the two currencies, the JPY hiking and the AUD holding interest rates. Thank you guys. I'll see you on the next episode. Goodbye.